I didn't expect the strategic Bitcoin reserve to be put in place so quickly. I didn't expect the President of the United States to say never sell your Bitcoin. So those I didn't expect. Every single crisis recruits a new class of Bitcoin believers. There's just a delay in between the crisis and the Bitcoin rally. So for example, in March, Bitcoin crashed with everything else. Then Bitcoin would rally up and rage, and then there would be a crypto crash and it came down. And on the other hand, now we're in a big tariff crisis, and the near-term reaction is always the market cramps and everybody sells everything. Now there'll be a new class of investors that will understand what it means to be exposed to those risks, and they'll be like, oh, you mean like no tariffs on Bitcoin? Yeah, no tariffs on Bitcoin.
Michael Saylor emphasizes Bitcoin's transformative role in the evolving economic landscape, highlighting its resilience during crises and potential as a hedge against systemic risk. He predicts increased institutional adoption, driven by ETFs and digital asset strategies, positioning Bitcoin as a core financial tool for the future. Saylor advocates for companies to integrate Bitcoin into their balance sheets to remain competitive and sees its liquidity and utility as key to its growing demand. He stresses that Bitcoin offers superior returns compared to traditional assets, urging investors to embrace its potential for long-term financial stability. As Bitcoin gains traction among businesses and individuals, Saylor envisions a future where it plays a pivotal role in wealth generation and economic transformation, redefining traditional investment strategies and global financial systems.
You're buying pretty much every Monday. Why isn't the price at 150 or 200K?
A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they kind of had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market, and I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury companies. If I had all my money invested in Bitcoin instead of invested in that company, I wouldn't have been affected by tariffs. And so what you have is a reallocation of portfolios to being more Bitcoin, less the other thing. People are thinking now, if I had more Bitcoin, less gold, I would have made a lot more money in the last 4 years. If I had more Bitcoin, less big tech, I would have made a lot more money. If I had more Bitcoin and less that bond instrument, I would have done better. So these are teaching moments, right? And in any macro panic, the most liquid, leverageable asset is Bitcoin. Bitcoin is the only thing that you can sell. You can sell it short with 50x leverage on Saturday morning. It's the only thing that you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile. And if someone wants to sell some financial asset because of some gloom and doom thing that's happened, they're going to go to Bitcoin first because it's the only thing they can trade, and not just trade in the US, trade globally, worldwide. And so it is volatile because it is useful, and it will be in times of panic and contraction. It will correlate for a short moment with other assets, but then it will bounce back and it will break that correlation, decouple, and it'll rally higher. And that has happened, consistently for the past 15 years. And it's happening right now as we watch it. So I'm calm in these times because I think we're going to win over a new set of Bitcoin believers, and a new set of people that thought they had the perfect business are going to realize that no investment in private equity and public equity or in a currency derivative is a risk-free investment. And when we say, look, Bitcoin is not a currency derivative, it is not a company, it doesn't have a supply chain, it has no employees, it has no nexus, it is not, subject to that counterparty risk. Now there'll be a new class of investors that will understand what it means to be exposed to those risks, and they'll be like, oh, you mean like no tariffs on Bitcoin? Yeah, no tariffs on Bitcoin. I think the best way to get superior returns, 100x type returns, if you're an individual, would be you adopt it. You keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep your job. You know, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead.
Michael Saylor sees Bitcoin as a safe, valuable asset that attracts new believers during crises and gains growing interest from big investors and companies. Its ability to avoid traditional risks makes it appealing in uncertain markets. He believes businesses can strengthen themselves by adopting Bitcoin, which offers liquidity and long-term growth potential. Saylor predicts Bitcoin will keep transforming investing and become a key part of the global economy.
I was surprised that the U.S. has embraced Bitcoin as radically as it has over the last 6 months. I think I didn't expect nearly all the cabinet members to be so enthusiastic, or the Secretary of the Treasury. I didn't expect the crypto czar to declare that Bitcoin is, the one global digital commodity in the world and is digital gold. I generally expect that large governments will move in a plodding, somewhat methodic, not always rational fashion, because there are just so many interests involved. And so my expectations are moderated in that regard. I think most of the aggressive action will come from small, mid-sized businesses, because they have the most to gain, the least to lose, and they can move the quickest. I think we're going through a rotation right now where, lots of non-economically interested parties are rotating out of the asset, and then a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees. I think we're going through a rotation right now where, lots of non-economically interested parties are rotating out of the asset, and then a new cohort of investors are entering. And what I've said about Bitcoin, right? The secret of Bitcoin and the simple, elegant truth, and the reason that it's spreading virally everywhere on Earth, and the reason it'll keep spreading. So a lot of smart people in the world, they just want to keep their money. That's the secret, right? People buy Bitcoin because they want to keep their money. People are starting to buy Bitcoin treasury companies like Strategy because we've constructed a very elegant, powerful business model based upon digital capital that strips away all of the dozen risks that are plaguing every other well-run company in the world right now. And so investors are smart. They think, well, how do I get a return and avoid the risk, and what's working? And, more and more are discovering our company every day. I almost look at it like it's like the sucralose of finance, like the universal sweetener, super high performance. And so there's a world of opportunity in the financial marketplaces if you incorporate the appropriate dose of Bitcoin volatility and Bitcoin performance into whatever instrument you're trying to create. CNBC talks about 100 tickers a day, but there's 100 stock tickers total, and they make up 80% of the trading volume. There's 12,000 public companies in the US. There's 4,000 or 5,000 on NASDAQ and New York Stock Exchange. Most of them, the market has lost interest in, and they're competing against a Google, or against Amazon, or against a Microsoft, or against an Apple. So if you're one of those mid-sized small companies and you're staring at these trillion-dollar, digital giants and no one cares about you, then at some point after struggling like that for month after month, year after year, you start thinking it's kind of hopeless. And so the explosion in interest in Bitcoin treasury strategies, I think, comes because companies are realizing that there's hope for them. There's an opportunity. And it is by plugging into the next great digital transformation, right? The way that you actually get back on top, the way you start re-energizing a company and growing it, is by digitally transforming your balance sheet. And the companies that have done it earliest are having extraordinary success.
Michael Saylor sees Bitcoin as a powerful asset during economic uncertainty, attracting new investors with each crisis. He highlights its advantages like no tariffs and low risk, making it better than traditional investments. More companies and institutions are adopting Bitcoin, signaling a shift in how people manage their finances. Saylor is optimistic about Bitcoin's future growth and its role in transforming finance globally. He encourages investors to be patient and consider Bitcoin as part of a long-term strategy. What do you think is the biggest challenge for Bitcoin's adoption? How will you include Bitcoin in your investments? Share your thoughts below.